Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, May the 25th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. A little bit of economic data today here in the United States. We had wholesale inventories come in a little bit lower than expected, and we had natural gas storage come in at 75 billion cubic feet versus 72 billion cubic feet, so a build there. The big news right now is we have the OPEC meetings going on basically all day. They're going to be talking. They have agreed to cuts to extend into the first quarter of 2018 of about 1.2 billion or 1.2 million barrels per day, but the market was anticipating a lot more of a cutback to kind of pull back on some of this glut of oil that we've been seeing. That kind of disappointed the overall market, as you can see, with crude oil down quite massively today for the most part. One of the biggest moves we've seen in quite some time, several months, and that was just due to anticipation of bigger cuts and them not coming through on that. The other aspect is that the United States fracking industry is really starting to pump out some oil, and that's going to cause more of a glut of oil. And with the 1.2 million barrel cut per day globally for OPEC, that's just a drop in the bucket, let's say, and crude oil really being hurt by that. Now, a couple of aspects. If you are looking at crude oil, technically speaking, we are right at support, being at that point of control or the value area where the most time and volume has been spent. That's where the market's comfortable. But if we are seeing this as more bearishness because they aren't going to be cutting as much as what was anticipated, and those guys don't usually abide by those cuts for the most part, we could easily see this market transfer down further, especially when we start seeing this 50-day moving average cross over the 200-day moving average. That signals even more bearishness. So we're seeing that start to happen here. The next line in the sand for the bulls to try and defend, I think that we're going to start seeing support right around the $47 a barrel area. Next point of support is going to be right here at around $44.50. So that could easily be where we're looking to travel to relatively soon. So I was looking for the Fibonacci, so I was going to just pull up a Fibonacci. I haven't looked at the Fibonacci as of now, but I just want to be curious as to see where the Fib levels are coming in line with everything else. As you can see, the Fib line for the 38 is right at where the point of control is. The next line for the Fib is the 50% Fib level, and that's just slightly above where I was talking about. That's closer to probably $48.50 or $47.50. I'm going to say it's relatively closer to 47s where the real support is for that one. And then I would have to say that this is going to act as more of a support where it's going to head for it as a target than the Fibonacci on the 61. So that's just my point. But these Fibs do line up quite well with the rest of the overall areas where we've been seeing support and resistance. So whatever you like to look at, I think we could easily see it bust through this area and go test this value area low if it starts to accelerate to the downside. Then on to gold. Gold is up on the day, despite the fact that this chart looks like it's a little bit down. It's a little funky in the way that it uses the overnight data, but gold futures are up on the day. Now, this is a little bit odd because we're seeing the equities push quite a bit higher, NASDAQ seeing an all-time high, but Gold and the bonds in particular aren't really buying into this. Bonds are still kind of holding their own at these levels, which to me is a little bit odd. I thought that we would see this come back down to this value area or the point of control. We're not really seeing that retracement happen relatively soon, which makes me wonder why the bonds are holding up so well with the equities pushing higher. It's almost as if the bonds aren't buying into this rally. So we'll have to see how that kind of works out. Dow Jones Industrial Average up $66, pushing up against the value area high. That's going to act as resistance to the upside. So market is kind of defending that area. As you can see, we were up a little bit further this morning, but kind of giving back just a little bit. This is the NASDAQ on a daily chart, near the highs of the day, up 64 points, and just blasting up to the upside, just as the shorts are probably starting to panic a little bit on this. But again, this is what I'm talking about. When you see this normally happen, we should see a bit more pullback in gold, a bit more pullback in the bond, but they're kind of holding their own right now. Albeit Bitcoin, I heard earlier, is getting crushed, which, was participating on the upside when gold was selling off. So that was a little bit bizarre too. Is if you were a flight to safety on currencies, you would fly your money into gold, and some people say to Bitcoin. But Bitcoin, I heard, was getting crushed today. I haven't looked at them recently to see what even their chart is on Bitcoin, but because I don't really trade Bitcoin, so I don't really keep a real eye on it. I just saw something come across on Twitter with that. So I don't really usually talk about that. So let's talk about the daily chart, 15 or 30-minute chart on the E-mini S&Ps, up 10 points, albeit they aren't up as much as the NASDAQ. But we are starting to see retailers turn around here. We saw BBY or Best Buy do very well on their earnings. They have a tendency to do very well on their earnings. I'll talk about that trade in a little bit. If you follow me on Twitter, you know what I did already. But they came out with better earnings. But in that, I think that you would see the E-mini S&P and maybe even the Dow doing a little bit better than what the NASDAQ is doing. All right, so this is the BBY trade, which is the ticker symbol for Best Buy. If you guys follow me on Twitter, you know that this trade was not, probably did not work out very well for me, and no, it did not. I went into Best Buy and was selling the May contract for Best Buy, and originally sold the Best Buy 55 calls for like 50 cents. So that trade clearly blasted to the upside. $55 was well outside of it. I thought the retailers weren't going to do as well in line. Best Buy has a tendency to just somehow trudge along. They came out and beat earnings here, beat earnings here, beat earnings here, beat earnings here. I kind of faded them this time. But when they beat earnings and they beat them like they did today, I think they were expected to see about 40 some cents in earnings, came out with 60 cents. That was very in line with what they were expected here. We're expected to get like 47 cents, came out with 62 cents, blasted up. So I'm just looking at it like I'm not going to ride this out and hope that it comes back, because past couple of times they beat like that, it really trends sideways to the next earnings cycle, and that's what they have a tendency to do. So I'm not going to even mess around with that. I would normally look to stay a little bit more mechanical, maybe even take the short position in Best Buy, but when they beat like this, it seems to continue to go up. So I just pulled the ripcord immediately this morning, basically very soon after the open. Watched it come down, probably could have gotten out a little bit better than where I did, and ended up riding it up a little bit and got out at $2.89. So you can obviously tell that was not a very good trade and not a good winner. If I start seeing this market pull back, I might be buying some puts in there, hoping that it will come down and try and cover this gap where people have missed out on some trade. And usually Generally speaking, we would see something like this happen and cover that gap there. So that's what I'm going to be looking at for a topping pattern in Best Buy to come down and try and cover that gap. Now, they didn't do it here, but it's not to say that they won't do it in this particular situation, or at least have a pullback to try and fill in some of that volume. Now, a couple of things that I'm trying to get out of right now, actually squeezing this SPY trade out. I am exceeding my 50% of max profit right now on this trade, but it's continued to rally higher, and so I just decided to keep it on. And in this, I have on the June short the 230 puts in there that I originally sold for about 80 cents. It's trading for about 20, so I'm a little bit better than, a lot better than the 50%. But I was looking to cover this, but with that Best Buy trade, I'm trying to squeeze a little bit more out of a couple of these winners that are working. IBM's another situation where I'm looking with IBM. I have on the June 160, 145 strangle in there that I'm short. Originally collected about $1.03 or something along those lines, trying to get out of it for about 45 cents right now, so a little bit better than max profit on that. Caterpillar to me looks like it's getting a tweezer top here. So with Caterpillar, I'm looking to try and implement a strategy where I can start shorting this. It has really low implied volatility. The earnings don't come out for quite a bit of time, but with this tweezer top look, I'm going to have to look to short this if it doesn't break above that. So my stop of myself will be if it goes out and starts trading like 106. If we get up there, then that tweezer top or settles up above 106, then I'm going to be looking to exit that trade. I'm going to have a real short leash on this. But looking for that to pull back. And right now I have a trade on there working. It's really close. I'm surprised I'm not getting filled on a few of these trades, but with Caterpillar, I'm working to buy the 110 puts and then sell the 100 puts. Try and do that for around $5.10, slightly over what my 50% of that width of those spreads is, but I'm willing to give up a little bit more of that because it seems like this trade setup is looking pretty good, and that trade would be in the November. So got a lot of irons in the fire right now and just not really getting hit on anything as of right now, but trying to work out of a few trades and add a few trades to kind of mix it up a little bit. That's all I got for you guys today. Tomorrow's webinar is going to be on risk reversal. So that's going to be a really good one, especially when you're trying to rebalance your portfolio. That's really good. Plus, I'm going to show you different things that the risk reversal will tell you in regards to the bias of what the overall market is saying about that underlying. So check that out at protraderstrategies.com and follow me on Twitter at Wolfman's blog for daily market commentary stuff, or daily snark, I should say, and the earnings trades that are still left to come out, right? If you can't take that, take it easy.